The euro and the yuan keep climbing against a retreating dollar. China's offshore yuan surged to its highest levels against the dollar in almost 3 years. The dollar has lost roughly 6% against the renminbi since the start of last year and 15% against the euro, with the ECB saying it wants to bolster the global role of the euro and the US administration seemingly keen to embrace a lower dollar. Does this suit everybody? Well, Jane Foley is head of FX strategy at Rabobank. Jane, President Trump called the dollar drop great. Is this intentional policy on the part of the US?
Well, we have seen Trump for a number of years really favouring a softer dollar, and that is because, in his words, you can sell more. So, from his point of view, it can help to really adjust the US trade deficit. But that's not necessarily the theme that we get from the US Treasury. Of course, for a long time, the Treasury has underpinned a strong dollar policy, and we have had Scott Bessent really reiterating that quite soon. So, we're not getting particularly strong messages from the US Treasury and the White House on this when you put them both together. That said, what we do know is that both the Treasury and the White House do want to protect the US as a reserve currency. And that is something, of course, that both the Chinese authorities and the Europeans want to grab a little bit more for themselves. And this involves creating a bit more autonomy away from the dollar payment system. And a starting point for that would be having more invoicing, for instance, in domestic currencies, in the renminbi, if you are in China, or in the euro for Europe. And also to really increase the amount of trade finance in those currencies. But it's been a very slow process so far this century.
But is it starting to work, especially as investors have been selling the US over the last year or so? We know that the ECB is keen to encourage global trade in the euro, but is it actually materialising?
I think it's going to be extremely slow, and I think it's really helpful to really examine the effective exchange rate both of China and the effective exchange rate of Europe, because what we see here perhaps is a different picture than you may see if you just look at the dollar exchange rate. So, for instance, if you look at the effective Eurozone level, well, we see a rate, an index, which is really quite close to the average levels of the post-global financial crisis era, not something that's particularly strong. And that's because a lot of the weakness that we've seen is really been related to the dollar. So the effective exchange rate for the euro really quite well balanced. And if we look at the renminbi, yes, we've seen a lot of headlines about that creeping higher against the US dollar. But actually, the renminbi has been not doing the same thing against a bunch of other, say, Asian currencies. So from that point of view, I think the effective exchange rate can really help explain why China is allowing the renminbi to climb against the US dollar. It's still not doing anything particularly significant when you look at it from an effective exchange rate point of view.
Is the drop in the dollar starting to be self-reinforcing, though, by encouraging investors to buy euro instead of dollar-denominated assets, for example?
I think there is a risk. For instance, if we go back, for instance, to 2022, we have a nice example of the opposite. Now, 2022, that is when the Fed started to hike interest rates. The market assumed, therefore, that the value of the US dollar was going up. And because the market assumed the value of the US dollar was going up, that was the consensus back then, where you do have evidence that some big, let's say, Japanese pension funds, for instance, were allowing their hedging ratios on dollar-denominated assets to slip. And it's quite possible that those same pension funds, if they believed that the value of the dollar was going to go progressively lower, that they may therefore take action to really increase those hedging ratios on assets they already owned. However, I don't know if there's a really strong consensus that the dollar is going to weaken progressively. Certainly, the market does assume that the dollar will weaken against, say, the euro going forward, against a bunch of other currencies, but we're not having signs of real progressive weakness coming through into the market consensus yet. And that is something which I think should perhaps detract from those risks associated with this self-fulfilling prophecies on the dollar so far.
Do you think, conversely, then, that after a year of sell US trade, we've probably already seen most of the downside for the dollar?
I think that is quite possible. And whilst, we talk about the weakness of the year, yes, the dollar was the weakest performing G10 currency last year, but actually it performed reasonably well in the second half. It was something like the third best performing G10 currency in the second half. Just about all of that weakness that we were talking about in 2025 was earlier on in the year, so much more stable in the latter half. A little bit of weakness certainly against currencies such as the euro, against a bunch of other currencies this year. But I think it's quite possible that we do begin to see a bit more of a pragmatic view coming through into the outlook for the dollar, because after all, it has weakened since 12 months ago, and therefore the value of some of those US assets may begin to look attractive to some investors.
That was Jane Foley of Rubber Bank. Don't forget you can watch more videos on Reuters.com.